So do we actually have more than 30 minutes?
You don't.
Okay.
It's a joke, yes, but if you run a bit over time, it's okay.
All right. Hello, everyone. I'm Nick from Cointelegraph. Cointelegraph is the biggest and the oldest crypto media outlet out there. And today's topic is RWAs, quite popular. And I think we could kick it off by introducing yourselves, our dear speakers, and telling us how you guys contribute into RWA field, whether as a company or personally, like yourself. Would you like to start?
Let's do it. Hello, everybody. My name is Marcin Hergovic. I'm coming from Slovakia, and I'm currently representing R10, one of the largest on-site exchanges in Poland. Well, to contributions regarding RWAs, well, so far, as far as I know, R10 doesn't sell any real assets besides stablecoins, obviously. So these are the killer app of crypto so far. But besides this, I'm a crypto regulatory lawyer and consultant. So hopefully, I'm doing my part by advising these projects on their next steps and getting to general adoption.
Makes sense. Marcin, sorry for
Yes,
that.
because it's a quite coincidence that there are two Martins and both are lawyers because I'm a lawyer too. So hi, hello. My name is Marcin Lewandowski, and I do have that unique perspective because I'm 16 years in the real estate market here in Poland, and from 2017 I'm a crypto freak, so I really do see this unique connection between those two markets and what the RVAs can be. So I think that that unique point of view that I do have and looking for the industry from both sides can show you how the RVAs can change the crypto sphere that we know, how it's gonna change everything that we know about crypto space and how it's going to onboard new users that we really need in this industry.
Hi, everyone. You will never guess my profession. I will surprise you. I'm a lawyer too. But my role might be a bit different because I'm representing FreeDots Group. So our own company, my own company run together with my business partner, Alexandra. FreeDots consists of two companies. We have FreeDots law firm, collaborating with Web3, AI, and deep technological projects. And FreeDots Advisory, where we are doing a little bit more creative things. It's regulatory advisory for technological projects. Me, myself, I've been Web3 since 2016, working in Big Four, then in law firm, but then I decided that together with my team, we would like to do something differently. And now I believe we are contributing to Web3 space by combining our knowledge and also experience working with different projects to provide really efficient, legally compliant, but also creative solutions for them. Thanks.
Before we move forward to Jakub, do we have any lawyers in the audience? If you have, raise your hand. All right, at least we have a balance here, cool. Jakub, please go ahead.
So we've got so many lawyers on the stage, so for sure it will be a very expensive panel.
Let's make something illegal.
Yeah, my name is Jakub. I'm a founder of Soil Protocol. Before joining a crypto space, for many years I was in traditional finance, working in mergers and acquisitions. Since 2017, I'm in a crypto space, my own project with my friends we started 3 years ago. Soil Protocol is a protocol that connects traditional finance with the crypto space. It's a credit protocol. You know, from the helicopter view, so if you are a crypto investor and got the stable coins, you can allocate your stable coins in our protocol and get a passive income from it. And what we are doing, we are simply off-ramping the stable coins and provide the liquidity to the financial institutions, mainly private debt funds, and that's how we generate income for the company. And then we bring back it to the crypto space and pay interest in a stable coin. So yes, I'm 100% in the RWA sector.
Good for you. All right. Since we have a little more time than I expected, let's do some direct personal questions. And let's start with you, Marcin. As a crypto regulatory lawyer and policy consultant, what are the most common issues that RWA projects bring to you from your consultant experience?
Yeah, definitely regulation. If
Oh, really?
Yeah,
Damn.
really kicking in, I believe, like 45 days. So everybody is interested about how to do stablecoins properly in a regulated manner, in a regulated environment. So far, we already know that Tether is not, for example, not interested in getting license under MiCA, so it will be definitely interesting. The other thing is that real-world assets tokenization, meaning a real estate tokenization, is quite difficult when you are basically dealing with cross-border transactions, because we also need to consider like KYCs and like get all the property change registered correctly with the cadastre and all the administrative offices. So yeah, there are really a lot of administrative hurdles.
You mentioned MiCA. So as far as I remember, MiCA comes into power on the 31st of December.
Yeah, the second part, stablecoin part, kicks in like 45 days.
All right. Can you describe me how will the 1st of January 2025 look to you?
I didn't get you.
How will January 1st, 2025 look for you when the full MiCA is accepted?
Definitely very busy, but luckily MiCA has these temporary provisions, or basically you get additional time frame to get the license or adjust to the conditions and get the license done. So until then, until the probationary period, or how do you say it, elapses, you're able to operate under the current license. So it's basically under AML Directive 5.
So in 45 days, we should not be expecting anything like significant to be changed, or?
Yeah, not at this point. I would say like a couple of months.
So nobody cares about MiCA at all at this point?
They do, but they keep silent.
Good. That's the answer I wanted to hear. Marcin, you have 16 years of experience in real estate. That's a lot. And with this experience in both traditional real estate field and Web3, what are the brightest use cases that blockchain brings into the traditional real estate market?
Okay, so the things that you really have to understand that it's quite simple, but it's, I would say, a game changer for real estate, that for the moment in real estate we're still in, let's say, very, very before any other branch of technology. So for example, if I would like to transfer my property right, let it be ownership, I have to go for a third party or a lawyer, I have to pay them, and they need to confirm that I was there, I was transferring, etc. And blockchain technology is giving us a unique opportunity to do it very simple. All of you probably know how smart contracts work. So think about it like that we can do it very quickly, super safe, it's completely transparent, and we do have this unique immutability that blockchain is giving us. So thinking about it in this way, think even deeper. Think about it that real estate project, can be founded like traditional, we can say, crypto project. So they can do the crowdfunding, they have an idea that they would like to do, it might be crazy, but it's very easy to do when you will deep dive in tokenization. And how big is the real estate market? We like numbers in crypto. So in 2022, global real estate market, it's $3.88 trillion US. And the forecast for 2030, it's more than 6 trillion. So it's gonna almost like double, and it won't be possible if the full tokenization come true. For example, BlackRock. We know everybody in crypto know BlackRock because of the ETFs. The ETFs was the first step to make it crypto very big. And I really believe that if the full tokenization will work, it would be a game changer for the industry, and we will obtain, I would say, completely new onboarded users because of that. Because look, for the moment, if you would like to buy a property, you have to do it completely. So you have to buy full property. Let's say in Warsaw, you have to pay 150 to 200K. And using tokenization, you can buy only a fraction. And you still have those unique benefits you will obtain like having the whole one. So for example, people that are having right now 10K, 50K, they cannot afford to buy full property, not in EU. For example, they can do it abroad, outside EU. And if full tokenization will come true, and I believe it really will, because BlackRock and all the financial institutions are interested in, the completely new world of real estate will open. Everybody worldwide can buy it, very easy to transfer, very easy to track all the changes in ownership. So I think that if we would love to have this 1 billion plus users, RVA and especially real estate, this is the way of onboarding those people to our crypto industry.
Actually, that's interesting. How big is the current fractional ownership market is? Do you have any insights on that?
Actually, it's hard to say because nobody is having this database. It's a tiny part of the whole global real estate market. So I can give you the numbers for the whole real estate market, but the fractional one, it doesn't work because the legal issues that we love, because it's our job, that it's not too easy to manage for the real estate if you are a fraction, just in fraction. And blockchain technology is giving us these opportunities, for example, using DAOs, that it's easy to manage. You don't have to ask everybody. It's easy to vote, etc. So it's a really game changer for the industry and, of course, for real estate. So the real traditional asset that everybody knows, that everybody possesses, and everybody wants. So I think it's something really huge.
So I think, how many of you guys in the audience actually hold some fractional ownership of a real estate? Is there anyone?
I don't think so.
All right. So my question, let's imagine that those people have no idea how they can invest into real estate, and they have no idea how blockchain could simplify their experience, and that now they can basically invest $100 into villa on Bali, potentially, right? So what should they do? What would be their user journey, I'd say?
Look, but in crypto space, we know how to launch a new product, how to find this financial part, how to get interest for the crypto investors. And the same will look for the real estate. I have an idea to build something fancy, something like a fancy hotel in the center of Warsaw. I don't have the funds, and I'm launching something like a marketplace from a real estate project, and I'm collecting money, telling you that if you invest 100 USD or 1K, you will obtain all the benefits like having 100% full ownership. So this is, in my opinion, something really big, but because completely new market worldwide, so I don't have to be even the EU citizen, because I'm not buying the, let's say, physical right, I'm buying a token. I can easy transfer, I don't have to ask for permission. It's something really huge. And I would like to tell you that not many people in crypto industry really understand the consequences of the full tokenization.
What are the consequences of full tokenization?
The consequences are like that we're going to open completely new market with completely new ways of funding, and it's going to be almost unlimited because everybody on this stage, for sure, and everybody on the audience can afford to buy something that is related with the RVEs for 1K, $100, because this is the money that we are spending every day. And you can diversify it worldwide. So in my opinion, something really, really big.
Yeah, I would like to add one point because it sounds like a dream. There are pros and cons. Yeah? So sure. I think that 2 blocks from the cinema, there is a building in Warsaw one of the most expensive apartments in Poland. And there was one guy that tried to divide ownership into 20K ownership titles.
Złota 44.
And he started the process. As I know that some agreements were signed and so on. And there was a problem because, how you can manage 20K of, people that want to be in this apartment because they own the part of the apartment. There was a problem with the elevator, for example.
So my dream that I would like to come true, of course, I agree with Jakub that it's just a dream, but I'm saying full clarity, full regulation, full AML, KYC, this is the thing that we cannot escape, will change it. Because if somebody as big as BlackRock is going to do it, they will do it properly and they will make it very simple, even for us, lawyers, because we would like to have it very simple, but for the moment, doing such a things like famous guy from Złota, it's not possible because they blocked them. I don't know if you know that the card give him a special, let's say, deny that he cannot do it because it's against other neighbors from the property.
Yeah, but it's like I agree with you that there is an opportunity because if you tokenize, I think that the main advantage of the RWA is that you make assets liquid as they were illiquid before. Yeah? So you can, let's say, divide some piece of art, apartment, whatever, and have everyone can, the entry barriers are lower. That's of course the advantage. But of course there are opportunities, but also there is the other side of the coin, as I said. Yeah. So I think that you need to have a kind of agreement. You need to know that even if we want to tokenize the real estate, for example, maybe it should be only an investment instrument. Yeah, and maybe the rights resulting from owning the property should be a bit different than the results right now. So I don't know what is the answer. Yeah? I think that this is a completely new reality, and I don't know if the market is ready for the consequences of tokenization of some real assets.
I would say that it brings a question about what tokenization is, because but tokenization now we are discussing only the ownership right, but in fact, if we think about tokenization in a broader scale, we should, first of all, accept that by tokenization we mean creating a token. What's token? Token is a digital representation of any kind of entitlement right. So it means that we can imagine an empty box and we can put inside not only co-ownership right, but any kind of entitlement. For example, entitlement to passive income. Not every investor would be interested to have a partial ownership right to real estate. Sometimes it's a matter of good investment, so passive income would be okay. And when it comes to real estate, real-world assets, there is a big difference in tokenization, because if we are tokenizing a digital good, then it's pretty easy, because by tokenizing, so selling token representing any kind of right or entitlement, let's say ownership right, we have two steps. The first one is transfer of the right, and the second one is delivery of asset. So if we are talking about tokenizing a digital good, we can do both steps digitally, using, for example, smart contracts. But the tricky part is when we are doing the same with real-world assets, because obviously we can put to this empty box entitlement, for example, co-ownership right, and we can transfer it sometimes, not always, because of course there are some agreements that must be made in a special form, for example, before the public notary, but sometimes we can transfer the right digitally, but can we deliver the physical good digitally? No. So we need to also be aware of some traditional regulation that may apply to the tokenization. And also ask ourselves a question, whether do we really need, or our investors, do they really expect to have co-ownership right? Or by tokenization, we can tokenize an income that would be generated by this physical good.
Do you see any way that it could be possible in the future where people could transfer, exchange, buy, sell, those kind of tangible digital assets? For example, those are security tokens we were talking about, for example.
First of all, we are, I think, still waiting for very clear indications whether given good is a security and what kind of security, whether there will be additional market for this security tokens that would be different from the traditional security market and regulation, because it's super difficult and really there is a tiny possibility that you can do it in effective way. So if we imagine that the regulation, for example, DAT pilot regime, combining with crowdfunding regulation, maybe some other regulations would be reflected by a digital system, it could be possible. For example, in Denmark, transferring the ownership right is made very simple because they have digital register, and you can use the digital system to transfer the right. You don't have to go to the public notary and do additional action. So if you combine, for example, that you have positive regulation, you have digital, secure digital system that will allow you to transfer the ownership right automatically by transferring the token representing the ownership right, that it might be possible. But of course, as you can see, there are so many details that must be put together to do that.
So, just a second. So, theoretically speaking, if we take the Danish digital asset transfer system and put it on chain, basically, if I hold 100 security tokens of a piece of property somewhere in Thailand, I can send them to you via exchange, and you will be the owner of it because it's going to be recorded on chain.
We are talking now about multi-jurisdictional transaction, and my example was exactly about Danish register for Danish real estates.
You lawyers make everything so complicated.
I know. I'm trying to, at least explain in a very easy way, but unfortunately the topic is not the easiest one.
I try to make it really simple. Look, guys, if you transfer ownership in Poland, there always have to be third party. This is the notary officer. You have to go there. You have to pay it. It's okay. But you need to do it physically. And I really believe that this is one of the, let's say, lawyers' faculty that is going to disappear very fast.
I agree.
Because we don't need them. I'm not against lawyers, because I'm a lawyer too. I'm not against notary officer, but we don't need them because we can do it very simple and smart contracts work. You transfer money, I transfer ownership. That's done. It's not possible. It's not possible to have a fraud or anything like that. And believe me, I'm in the real estate market 16 years. I've seen so many strange things when people were trying to transfer ownership. The second party didn't pay, and the ownership was transferred. So how will you feel about that? You transfer your ownership, you don't have money, you can go to court, but it lasts months, not days. So blockchain is giving us an answer to make it very secure, very fast, and very convenient even for the user that really don't understand what blockchain is. So that is my thesis, that it's going to really change the real estate market as we know right now.
Cool. Dorota. So since the... do you remember when the people actually started talking about the real estate tokenization, like RWA tokenization at all? Was it like 2021, something like this? Yeah. Cool.
Even before, around 2017, I remember from my previous company.
Cool. So my question is, I'm sure you've been following the field for a while now. You've been monitoring all the regulatory updates, and my question is, are there any positive advancements in that field? Can you see that regulators are becoming more soft when it comes to RWA tokenization, or the environment is getting tougher? What's going on in terms of regulation?
I think that there is still not like dedicated regulation for the RWA tokenization. However, within that digital financial package presented by the European Commission in 2022, this package consists of 3 regulations. The first one, MiCA, that everybody's talking about, so you already know from different panels. The second one is DORA, and the third one, which usually is not mentioned by many people, is DLT pilot regime. And this DLT pilot regime is a pilot regulation that is all about creating a market for security tokens. So now the European Commission is trying to verify whether the security tokens should be operating under different market and regulation that typical securities, so MiFID II and other European regulations. So currently projects can apply for this DLT pilot license, and after 3 years, because it has been established for 3 years, the European Commission probably will decide whether to create a special market for security tokens offering and trading.
So there is no certainty. Maybe in 3 years they will not.
Actually, now 2 years, but yes. We still don't know, but the good thing is that they are at least trying to verify, because it's not the same trading typical securities, traditional securities, and those digital. So I think it's a good approach.
Since you mentioned different jurisdictions, can you, I don't need like a detailed comparison, but if you compare like European regulation in terms of RWAs, MENA, and Asia and the United States, which regions would you say the toughest, and which regions are the most open to those opportunities?
Yeah, I love this kind of questions, because it's you can stay here. You don't have to go anywhere else, because there are so many things we can discuss about. Everybody's smiling because, you know, in every region you have different regulations, and we lawyers are always trying to find the best way for our clients to make this offering. First of all, we are deciding whether a given token is a security token or a utility token, or maybe different kind of token. So in some jurisdictions, you still have this division between security, utility, and other jurisdictions you have just security and non-security token. So it still can represent some kind of passive income and not being qualified as a security token. So by that, for example, you can already create some kind of incentive for your investors to offer tokens representing a part of the income generated by the real estate. An example. An example of this kind of approach is BVI. Then we have United States. In United States, you have many regulations, but you have also exemptions to the regulations. And when it comes to the security token, one of the most interesting exemptions is the Reg S, that allows you as a US company to offer security tokens to non-US resident. But of course, there are some legal prerequisites you need to meet when it comes to the capital governing the company, and also the token not being offered not only in this preliminary sale, but also on a secondary market. But still, there is kind of an exit or option for projects. And when it comes to European Union, we are definitely the best when it comes to the regulating everything in a very detailed way. So we have the biggest catalog of different regulations that would apply to the security token offering. So answering the questions, of course, each market has its own regulations. Sometimes the interpretation of the same regulation rules is different and in vary of the current situation on different markets. But luckily for you projects, there are still a space to look for different options for your growth.
Cool. People are leaving us, so we should quit speaking about regulation, I guess.
We love to regulate in you.
Jakub, I wanted to ask you about soil. So you guys are RWA backed, which brings additional stability and tangible added value. So my question is being backed by RWA assets always means stability?
So for sure, the component or real-world asset somehow enhance the risk profile of the protocols and projects, companies, and so on. But it's not like a remedy for everything, for each risk. Because, for example, from my part, let's say, there are some protocols that are indirectly tokenizing debt. And it doesn't mean that if you've got a corporate debt in a tokenized form, that the risk of the default of the company simply do not exist. Because there are some cases like protocols like a Maple or Centrifuge that recorded massive defaults recently. Yeah? So Maple is tens of millions of dollars in a default. Yeah? So it doesn't mean that if you've got an ownership title or kind of part of the debt in the tokenized form, that there is no the risk that exists in the real world. So, for example, I think that I need to remind you that one of the first serious real world asset that was tokenized was cash. So if we've got a Tether or USDC, this is a real world asset. Yeah. So we recently, I don't know, like since 2 or 3 years, we are talking about the real world asset. But Tether exists for 10 years or even more. Yeah. And this is how it works. So simply you got a real world asset like a cash. You go to the Tether, they mint you a USDT, and then you can redeem it and get a cash. So simple as it is. Tokenization of the real world assets. Yeah? So what we have seen last year in March, what happened with the USDC over the weekend, because there was a problem with the Silicon Valley Bank in a real world asset bank regulated in the US. And part of the reserves kept by the US, by the Circle, was kept in the Silicon Valley Bank, exactly 8% of the cash reserve. And the DPEG in a USDC was exactly 8%. So it means that the difference represented the amount of the value that was at trade that simply will vanish. Yeah? So so what does it mean? So it means that even though that we had a real-world assets that were tokenized, and there is a problem of the underlying asset in the real world still exists, as in this case on the Circle. Yeah? So if the Silicon Valley would fail, that would be the problem with the collateral, yeah, with the part of the back that the USDC is backed. So for sure, it's as I said. So I see that the tokenization provides a more liquidity to the illiquid asset, but we still need to be aware that it doesn't solve all the problems. Because even if you tokenize the real estate, you got a token. It depends what kind of token you get, either passive income or with the ownership. But let's assume that there was a fire and you've got some damage. Yeah, so you've got a token, and someone needs to take a claim from the insurance company and so on, take care of the whole process. Yeah, somehow settle with the owners of the tokens and so on and so on. So I think that this is like a move. We move forward. We somehow lowering the entry barriers for some investments. For sure, we open the liquidity gates for the assets. But still, we need to be aware that it doesn't solve the problem with the underlying asset that still exists in the real world. Yeah? So for sure, it's a lot of opportunities, but it doesn't change the risk profile. That's my perspective.
Thank you for such an extensive answer. When we were, don't put the microphone away too far. So I wanted to ask you something. So when we were speaking about the tokenization of RWA assets, in 90% of the cases, we would speak about the real estate. My question is, if you were personally to invest in RWA, what kind of RWA would you invest into?
It depends, actually. So I cannot answer because it depends what you are looking for. What is your risk profile? What is your duration expectations about the investment horizon? So you can invest. I think that for sure what Marcin before said. So thanks to the tokenization, and that you have a partial involvement in some investments. You can tokenize some piece of art, for example, or some luxury goods, and so on and so on. So it opens opportunity for the new investments. But from my perspective, I still, in a traditional, let's say, investment instruments, real estates, maybe some luxury goods, but yeah, for sure the portfolio will be wider. In Poland, for example, so talking about the regulations, I think that the tokenization is a kind of democratizing access for some financial instruments. Because let's have an example in Poland. If you want to be a part of the private debt fund, so if you want to invest in certificates of the private debt fund, the minimum ticket is 40k euro. So it means that if you will tokenize this kind of funds, and you will allow, for example, to have one token each for $1. So it means that everyone will have an opportunity to invest in financial instruments that before were not available to the, let's say, poor people, let's say, yeah? Because only for the wealthy people such instruments were available. That's, for me, it's a change that is related to the tokenization. Democratizing access to some financial instruments, some investments, and so on.
So in my opinion, we do have to have brighter view, because lots of you,
Bless you.
not going to invest in real estate, and you're looking for something that is really like Degen-like, and you would like to have really good money. And I really understand that because the market is changing. So people in their 20s or 30s, they don't think about stock market, bond market, default market, anything like that. They're in crypto, and they want to have this unique benefit of obtaining great money. For example, I've seen a project that is tokenizing the celebrity DNA sequences, and you can have a part of their DNA. How cool is that? Or there's a project that is tokenizing time travel experience. So I know it sounds crazy, but I believe that tokenizing is a future for any kind of crazy idea. So coming from real estate, that
And
I
for
talked
scam.
before,
And for scammers.
of course, but the world is not the same how it used to be 10 years ago. The crypto is giving this unique opportunity to do something crazy, to do something that it's, I would say, impossible in traditional world. So I would say that the only limit that we have is our imagination. And I would invest in DNA sequences of celebrities.
It was a perfect follow-up to my last question. The last question to everyone.
So I want to add one point, because you asked me if tokenization of real-world assets mitigates some risk, but actually it opens a gate of some artificial instruments like a tokenization of DNA or, I don't know, land plot on the moon. And it's backed by what? But nothing, actually. Yeah? But I am 100% sure that there would be like a lot of people that would be interested in investing in it. And so it's a pros and cons of the process.
Yeah, 100%.
Nick, last question to everyone, bearing in mind you have 1 minute to answer it.
Damn,
in
all right.
total.
Let's make it quick. What are the craziest things that are being tokenized, in your opinion?
I can add one thing. Tokenizing emotions and memories of yourself or somebody famous, and you can sell it. So like I told before, the ideas are completely insane, and there's no limit with that.
This one is not as crazy as Marcin's, but I heard about tokenization of emoji, which is pretty cool, I would say.
One of Polish artists tokenized a part of her body, including the backside.
The backside.
And I read about some company that tokenized smell of the perfume. So for me, it's difficult to understand how it's backed by what, and is it tangible, or for how long it exists.
And does it lose the value every time you sniff, right? All right. Thank you so much, our dear speakers. Thank you to the audience. Great panel. Thank you so much.
Thank you.
Nick, Marcin, Jakub, Dorota, Martin, thank you so much.